Hello all, welcome back to the channel. Imagine this, you wake up one morning and see the stock market has crashed by 5%. Your heart races. Should you sell? Should you hold? If you have invested in mutual funds, you don't even have a choice. You can only sell at the day's closing price. But if you own an ETF, you can exit immediately at 9:30 am itself. This is just one of the key differences between ETFs and mutual funds. But which one is better for you? That's what exactly we will uncover in this video. So stick around till then because we will also discuss the best ETFs to invest. Many investors struggle with choosing between ETFs and mutual funds. Mutual funds have been around for decades, but ETFs are gaining massive popularity. ETFs promise a lot, like lower cost, better flexibility, and tax efficiencies. But mutual funds still have their advantages, especially for long term investors. So, how do you decide? So, let's break it down. So, what are mutual funds? A mutual fund is a professionally managed investments that pools money from multiple investors to buy a portfolio of stocks and bonds. For example, if you invest in Nifty 50 index mutual fund, the fund manager buys stocks in the exact proportion of the Nifty 50 index. If Reliance has 10% weight in the index, the fund manager buys 10% Reliance shares for the fund. So, what are the different types of mutual funds? There are mainly two types of mutual funds. Active mutual funds, a fund manager actively selects stocks trying to beat the market, whereas the passive mutual funds, which simply track an index like Nifty 50 or Sensex. So, how do you buy or sell mutual funds? You buy at NAV, that is net asset value, which is calculated at the end of the trading day. If you place a buy or sell order in the morning, the transaction happens only at the day's closing price. The pros of mutual funds are it is easy for beginners because we have an SIP option. Number 2, professionally managed. Number 3, suitable for long-term wealth creation. Along with that, there are some cons of mutual funds, like it has a higher expense ratio, especially for the actively managed funds. And number 2, no intraday buying selling flexibility. So that means we will get the NAV value at the day's closing price. Now, if we compare that with the ETF, ETFs are exchange traded funds which are similar to mutual funds but it trades on the stock exchanges like a stock. Instead of waiting for NAV, we can buy or sell the ETFs at the market prices throughout the day. So there are different types of ETFs like index ETFs, that is Nifty 50, Nifty Next 50, S&P 500 etc. There are sectors ETFs, pharma, banking, IT, and then there are commodity ETFs, gold, silver. So how do you buy or sell ETFs? Buying ETFs directly from the stock market using a demat or trading account. Unlike mutual funds, we can buy at the real time prices instead of waiting for the NAV. So the pros of ETFs are it offers lower expense ratio. No fund manager we have to pay for that. Number 2, real time buying and selling. Number 3, more tax efficient, especially in India where new debt mutual fund tax rules applies. Then there are some cons of ETFs too. Number 1, requires a demat account. Number 2, liquidity issues in some ETFs. So let's take an example. Meet Raj, a 30-year-old salaried person who wants to invest in Nifty 50, but he is really confused. If he buys a Nifty 50 mutual fund, he gets his unit only at the end of the day, that is the day's closing NAV value. But if he buys a Nifty 50 ETF, he gets it instantly at the market price. And also, Raj is little cost conscious. A Nifty 50 ETF like SBI Nifty 50 ETF has an expense ratio of just 0.07%, whereas a Nifty 50 mutual fund typically has an expense ratio of 0.2 to 0.5%. Over 20 years, this cost difference can impact returns by lakhs of rupees. So which one is better, ETFs or mutual fund? The answer depends on our investing style. So I will choose mutual funds if I am a beginner and prefer SIP investing. If I don't want to manage my transactions myself and if I like to have a professional management. I will choose ETFs if I want lower cost and better flexibility, if I already have a demat account, and if I am comfortable buying and selling on the stock exchange. So these are the criteria which I'll choose mutual funds or ETFs. So now if someone who wants to invest in ETF what are the best ETFs to invest as of now? There is one SBI Nifty 50 ETF which tracks the Nifty 50 index. It has an expense ratio of only 0.07% and the 5-year return it has given as 15.6%. Then there is Nippon India Nifty 50 ETF which invests in India's next big companies, that is ranked 51 to 100, and it has a 5-year return of 18%. Then we have Motilal Oswal Nasdaq 100 ETF which invests in the top 100 US tech companies and it has a 10-year return of 21% CAGR. Then we have Kotak Nifty PSU Bank ETF which invests in government banks and it has a 3-year returns of more than 100%. And last but not the least, HDFC Gold ETF for safe haven investment in gold which has a 5-year return of more than 12%. ETFs are the future of investing, but mutual funds still have their place, especially for those who prefer SIPs and professional management. Now that you know the difference, which one you will choose, ETFs or mutual fund? Let me know in the comments. If you found this video helpful, hit the like button and subscribe for more personal finance initiatives. Thank you.